In this market analysis, we're looking at a fresh update from Willy, who has shared his latest perspective on the current Bitcoin price crash. He recently made a tweet that sparked a lot of attention, which we'll walk through in this video, one step at a time. He tweeted, "Trend, exhaustion analysis. History shows that major market cycles tend to end with periods of extreme stress, moments when the system simply can't sustain its previous momentum. 1929. The Great Depression. A massive bubble finally snapped, sending markets into an 86% collapse and triggering over a decade of economic struggle. 1968. A long secular bear market. Mounting monetary strain pushed the world toward the fiat era. Markets dropped minus 48%, or minus 78% when adjusted for inflation. Confidence took more than a decade to rebuild. 2001. The dot-com bust, leading into the 2008 global financial crisis. A minus 57% market decline, minus 66% inflation, adjusted revealed deep structural fragilities. Again, the recovery process stretched over many years. 2025. If history is any guide, trend exhaustion tends to surface roughly every few decades. When it arrives, markets often require 10 or more years to fully detox and reset. We may be approaching another inflection point, one that tests the system's resilience and reshapes the landscape for the next generation of investors. He also reposted a very interesting tweet saying, "I've been sitting with something for a while now, and I figured it was finally time to put it into words. I don't normally write long posts or dive too deeply into personal thoughts, but this has been weighing on me more than I expected, so here we go. I love Bitcoin. It genuinely changed the course of my life. Not just financially, but intellectually, emotionally, and even philosophically. It shaped the work I do, the people I surround myself with, and the way I see the world. But over the past year or so, I've noticed something in myself shifting. My voice hasn't been as loud, my presence hasn't been as consistent, and that spark, that energy I used to feel so naturally, hasn't come as easily. I didn't really understand why until recently. It's not that Bitcoin itself has changed. The protocol is still the same, the mission is still the same, and the properties that make it special are still intact. What has changed is the direction of the narrative wrapped around it. Ever since the ETF era began, Bitcoin has been viewed more and more through an institutional, Wall Street-friendly lens. It's become, at least in the public conversation, a polished financial product. A sound money asset managed, packaged, and marketed by major institutions. And while I don't think institutional adoption is inherently negative, something about that shift feels like it's quietly pulling the story away from what originally sparked my passion. A decentralized, permissionless, global network built for individuals, not just corporations. A tool for personal sovereignty, not just portfolio allocation. That original vision, messy, grassroots, borderless, and empowering, is what lit me up. And I guess I've been trying to reconcile that early fire with the cleaner, more corporate narrative we see today. Many people I've spoken to lately are sensing the same shift happening in the Bitcoin space, and it's not just in their heads. The landscape is changing, and it's worth paying attention to what that actually means. To be clear, the rise of ETFs and increased institutional involvement isn't inherently negative. In fact, it's great in many ways. It brings more awareness, legitimacy, and visibility to Bitcoin than ever before. More people get introduced to Bitcoin through these familiar investment vehicles, which can be a powerful entry point. But Bitcoin's real strength comes from something deeper. Its value grows when individuals actively participate in its decentralized, self-sovereign network. That becomes harder when most new participants buy Bitcoin through ETFs, where the underlying coins sit with a centralized, regulated custodian in the US. Those flows may increase price exposure, but they don't strengthen the network itself. They don't teach people how to hold their own keys, take responsibility, or embrace the principles that make Bitcoin unique. The roots of Bitcoin, sovereignty, resilience, and freedom, still live with us, with individuals, with people who choose to hold their own keys, run their own nodes, make peer-to-peer transactions, learn, experiment, fail, improve, and slowly push the world closer to genuine decentralization. That grassroots energy is what made Bitcoin possible in the first place, and it's what will keep it alive. We need to keep nurturing those roots. If we water them, the whole tree can continue to grow, stronger, broader, and more resilient than any centralized alternative could ever be. If we truly want Bitcoin to succeed in the ways that matter most, we can't sit back and hope that institutions will tell the story for us. They never have, and they never will. Not in the way that reflects what Bitcoin actually represents. That responsibility sits with us, the people who use it, secure it, and believe in it. And honestly, when I look back, I haven't been carrying my weight in that mission lately. So that's going to change. I want to put more of my focus back on the parts of Bitcoin that truly matter. Self-custody, decentralization, and personal sovereignty. These ideas are the foundation of why Bitcoin even exists, and I'm going to start highlighting them more consistently, alongside the data, charts, and analysis I already share. Because Bitcoin's real value doesn't come from headlines or price predictions, it comes from the number of people who hold their own keys, who build on the network, who transact with confidence, and who choose to participate in an open financial system. If that energy fades, then the magic of internet-native money starts to fade with it. But small actions compound. Every single person who learns to self-custody their Bitcoin makes the network stronger. Every conversation about decentralization reinforces the culture that keeps Bitcoin resilient. These little steps matter far more than they seem. Right now, the market is still finding its footing in this new era. There's noise, there are narratives, there's uncertainty. But when you zoom out, the long-term picture is as inspiring as ever. If we can combine institutional awareness with real-world usage, grassroots education, and a renewed commitment to sovereignty and decentralization, then Bitcoin's future isn't just bright, it's powerful. The future is orange,